This conference will now be recorded.
So we on this in-class problem where I had a simple problem with one raw material, ink 2 at 10, direct labor, 3 hours per book at 12. Our overhead cost was estimated at 600,000. We're producing 50,000 and the selling price was 3 times the unit cost. So did we come up with an estimated unit cost for this? I'll just say, where am I? Okay, so on the template, we have the template with worksheet 1 on worksheet 2. So let's go ahead and see if we can review this quickly. I think we worked on this last time. And so if we were doing the simple template, we had one raw material. It was in there at what? The unit cost was 10. Quantity was 2. So what was our raw material cost in this example? Was that 20? The labor, the cost of the labor was 12. Took 3 hours. And so therefore, our labor cost is 36. Any question on those? Now we need to work on that labor productivity. And the labor productivity here is 3, and we multiply because we multiplied above. So we know that once we get a POR, it's going to be 3. Total overhead in this problem was what? 600,000, correct? Total quantity, 50,000. Labor productivity was 3. And so because it's taken 3 hours, this number was 150,000. And therefore, the POR is low. If we were so we get a bigger number here, but if it was we made 3 per hour, then you'd be dividing. So you divide into a larger number. So that's why it's always larger when you can make more than 1 an hour. But we have the 150 total hours. If we divide 150,000 to 600,000, what do we get as the POR?
4.
So we'll come up here and put 4 here. So 4 times 3 is what, 12. And so our total cost, when we add them all up, 20, 36, and 12, how much do we get?
68.
68. What's our selling price going to be?
204.
How do we get 204?
68 times 3.
And what does 3 represent?
The multiple selling price.
Selling price multiple. So 204. And we said the POR was what?
4.
4. Are there any questions by anybody on this? Okay, now we're ready to make journal entries. So in the acquisition, and as we make these journal entries, so we'll go to the journal entry template. Most times in stage 1, we're recording the acquisition of raw materials, but any other types of costs, we will put those in there also. Okay, so form the corporation investing 50,000. What's our debit to? Okay. Cash.
We're on the first corporation investing. Common stock.
Form the corporation. When you start a company, you got to put some money in the bank. So I'm just, these are just general ones that we make from Principles 1. So 50,000. This is virtually always the first journal entry a corporation makes because it has to have a bank account. It has to issue stock, and the cost of that stock goes in the bank. So the person forming this corporation took $50,000, put it in the bank. He got stock certificates back. He or she got stock certificates back. Then we had to purchase some equipment. It's like people talking about making shoes and everything. So we have to go and purchase our equipment that we're going to use to make the thing. So debit equipment, we said we use a note. So as you're working on your projects, you have to make a list of all the equipment you got to buy. There's 2 types of equipment. There's manufacturing equipment, then there's office equipment also as you run in the company. So that was what, $800,000. And then the next thing we're going to do what? We're going up here and buy our raw materials now. Purchase 110,000 ink cartridges at $10 each. So what number is going here? Is that by any chance 1,100,000?
Yeah, that's correct.
Does anybody have any question on what we've done so far? Can everybody do what we've done so far? Okay. In stage 2, stage 1 is where we get ready to work. Stage 2 is where we do the work. And you notice in stage 3, there are always debits to work in process. First thing we're going to do, we're going to bring the ink cartridges in. Now, we bought 110,000 because we have to have extra ink cartridges. So our production, even though we only needed 100,000, we buy extra ones so production won't slow down. So if we transfer in 100,000 ink cartridges, you got the journal entry. What's the amount going to be? got the journal entry, give me an amount. Well, how much did the ink cartridge cost?
Is it a million? Is it a million?
$1 million. I don't know why y'all want to make this so hard. I don't know why. So, yeah, we bought $1.1 million, but you transfer to the production for just what you need, but you got extras so that if something happened, you don't have to stop production. If you don't have extra raw materials, you run out. Production stops. You have workers and everything involved. The actual direct labor hours were 152,000 hours. So we didn't have this, so we got to go down here. We got to pay the workers because when people work, they want to get paid. So how much is going to go here?
1,520,000. 520,000.
Sounds good to me. At least one person gonna pass the midterm. Okay. So the workers work, so we have to pay them what they work. Then we want to estimate the overhead. Manufacturing overhead, all of these costs here. And so we have to estimate ahead of time to determine, because remember we have to come up with a selling price. And that selling price has to have all costs in it. And so, but when we get ready to make this journal entry, this is where that POR comes into play. So how much was the POR?
4.
So the POR was 4. We're going to multiply that times these labor hours, 152,000. So this is why you can't just use quantities and why you have to calculate a POR. The overhead, follows the labor hours. So when we get down here, we got to multiply 4 times those same labor hours from above, 152,000. So let me go and make these larger. So what's 4 times 152,000?
608,000.
So notice what's happening. We calculated selling price, estimated unit cost, selling price, POR. Now we're starting to make the journal entries, standard journal entries, which is the way things always proceed. So right now, everything has been going along fine. How many books were we supposed to make? 50,000. But how many do we actually make?
40.
So we got these workers and they're working and they don't get everything done. So let's see if we can go to the T accounts for a second to see where we are. I don't know where this material came from. This is fine. So these are the costs that we have in here, correct? So in raw materials, we bought $1,100,000. Then we transferred $1 million in the work in process, and that left $100,000 in raw materials. Then we put in $1,520,000 in labor and $608,000 in overhead. So the total cost in here, if I could insert. See if I could. Okay, that's what I wanted to do. So we were supposed to make 100,000. Excuse me, we're supposed to make how many? 50,000, right? But we only made 40,000. So we've got to make a journal entry transferring the cost of 40,000 books to finished goods. We got to make a journal entry transferring the cost of 40,000 books to finished goods. So let's look at how we're going to do that. The workers have been paid and they got their money for 40,000 books. So we have to hire some more workers to finish up. Their costs have been paid, it's all going out. Overhead goes right with it. So all the overhead costs we're going to transfer out. For the raw materials, we still will have those ink cartridges for the 10,000 books out. So we're only going to transfer, for the ink cartridges about 80% of the cost. See, the workers, you were not on them enough. They didn't produce enough, but they still got their money and gone. That cost has to go, and the overhead goes with it. So if they didn't mess up the ink cartridges, 10,000 of the ink cartridges are still there, but 40,000, well, the ink cartridges, 50,000 are still there, but 40,000 are there now. It took us 2 ink cartridges all the time. It took us 2 ink cartridges. So we're going to take 40,000 out of 50 complete is about 80%. So for the ink cartridges, we're not going to transfer out all the costs. Those ink cartridges will stay for production the next time. So we get ready to transfer the costs, all of the labor, all the overhead, but only 80%, for what was 50, 80% of the raw materials, those other raw materials will still be there. So we all sum total these. Let's see. That's 3,128. So we're going to transfer out 2,928. So how much is left behind? you should be 200,000 left behind. So we're going to make a journal entry, crediting work in process for 2928. Now I will put these in yellow just because that's what we use to calculate it. It doesn't work. Okay. So we don't make, we just make the journal entry. I just showed you how we got it. And so now coming into finished goods is going to be 2. So we go back to our journal entries. So we're going to debit finished goods and credit work in process for 2. So going back to our T accounts, we put $1 million in the work in process, $1,520,608,000 for a total of $3,128,000 in cost to make 50,000 books. We only made 40,000. All of the labor and all of the overhead comes out, but only a portion, 80% of the raw materials, because those raw materials remain behind to be worked on next time. There's no need to save any cost in there for the workers because they paid and they've been paid and they're gone. So that's how we calculate. That's how we calculate the cost that goes out. So it's a simple process, really. Okay, so now we have 40,000 in finished goods. I'm gonna get ready to sell something, but guess what we got to do? We got to calculate the actual unit cost. We need to calculate the actual unit cost. So what's the actual unit cost going to be, you think? How much did it cost us to make these books? Let's see if you can divide 2,928,000 by 40,000. Divide 2,928,000 by 40,000.
$73.2.
73.2. Now, how much did we plan for the books to cost?
$68.
Okay, when we were planning, we wanted those unit costs to be 68, but the actual unit cost is 73.20. So we ran over. So we plan a cost, but then you got to run your production operation so you stay intact. We didn't do that here. Okay. Okay. Now it's time to go on to stage 4, where we sell 30,000 books. Okay. So we're getting ready to sell 30,000 books. Where we're going to sell the books at? In a journal entry, where we're going to sell them at? Okay, so what did we say the selling price is going to be for these books, or whatever it is? What did we say the selling price is going to be? We calculated a selling price that was going to be $204. So 204 is going to come here. So when you calculate that selling price, I don't care what the cost's going to be. You already have told people you're going to sell them at 204. So you have to do a lot of hard work. And we're going to multiply 204 times what? How many did we sell? So 30,000. So what's 30,000 times 204? What is 30,000 times 204?
6,120,000.
I hope it's not 6 million.
Wait a minute, let me verify it again. 30,000 times 204 equals.
Yeah, that's what I got too.
Yeah, that's what I got.
Same.
6,120,000.
Okay, you got how much? 6 million what?
120,000.
Okay. Okay, so 6 million. Okay, that's correct. Now we know whenever we sell something, we got to do what? Take it out of inventory and put it in cost of goods sold. So how much are we going to put in cost of goods sold? Put my X here. Got to put in for 30,000. What's going to go right here? Selling price 204. What's the cost going to be? $73.2. So we have to go back and pick up that actual cost now. So what's our cost of these books?
2,196,000.
2 million. So all we've done is gone to stage 4 and sold books. We've gone to stage 4 and sold the books. Any questions? Well, let's see, wait a minute. T accounts. Let's see if we can post these sales 6,128,000. Is this cost goods sold 219,2196 correct? So we have credit that, got 732 left. Okay. So they've shown up in here automatically. Okay. Remember we said we estimated the overhead. That was going to be 600,000. But then the hours went off, so we ended up charging 608. That's what we put in the process. But when we get to the actual overhead incurred, it says that there was depreciation of 160,000. And the cash expenditures are 450. So when we add those up, the total overhead, am I on the right line? The total overhead is what? Is that 610?
Yes, sir.
Okay, so let's go back to our T accounts. So the actual MOH is 610. We estimated the MOH to be 608. See this entry here? So this is kind of a holding account where we estimate the overhead 608. It was actually 610. So we underestimated or underapplied the overhead. So our costs are off. This account has got to go to zero. Okay, so it's just a temporary account. We put the estimate in early on. We get the actual cost. Then we zero it out into the cost of goods sold. So I know to get this down to zero, I got to credit this account for 2,000. Then I'm going to debit cost of goods sold for 2,000 because we didn't put enough costs in there. That's all that amounts to. So the journal entry for that is we can have the situation we have, we didn't apply enough, so we debit cost of goods sold. And we credit manufacturing overhead, we under applied. Now, if it worked the other way, if we had a situation where we had applied 615 and it was actually 610, then we would reverse the journal entry. So if this is MOH here, and if we had actually put in here 615, if we'd applied 615, and the actual was 610, now we applied too much overhead. Cost of goods sold is overstated, so we would have to make this other entry over here, debiting manufacturing overhead and crediting cost of goods sold because the cost is too high. So you see this work, you see here, R, you got one situation or the other. You either applying too much overhead and you debiting, you didn't apply enough and you debiting cost of goods sold, or you apply too much and you crediting cost of goods sold. You make one entry or the other for the over or unapplied. We've got to determine selling price early on. So we have to estimate and make this journal entry here where we debit working. This is an estimated number that has to be done mid-year, early in the year. The actual costs don't come in until a lot of them until December. So that's how the manufacturing company operates. Now that is the last hard entry. Stage 5, record the selling expenses, 20% of sales. So we're simply going to debit selling expense. And credit cash. 20% of sales. So how much were the sales? 6,120,000. So what's 20% of that? $612. So at 1224, what's 20% of 6120?
$12.24.
So 1,240,000. That's what the salesman get. Then we got to pay the administrative expenses. And so the administrative expenses were $1 million. So you can see there's only a couple of difficult journal entries as we're focusing on the manufacturing process. And then we pay some dividends. What's journal entry to pay dividends? And that's $50,000. So we're done. We got all of our journal entries made. We got all of our journal entries made. Any questions? Okay. Let's look at our two new statements quickly. The first one is cost of goods manufactured, and the second one is cost of goods sold. So the purpose of cost of goods manufactured is just to summarize what's happened for the manufacturing for the period. And it's good to put the unit cost down too so we can compare it. So for the raw materials, we didn't have anything in beginning inventory. How much did we purchase? $1,100,000. The raw materials at the end were $100,000. So the raw material used in production were $1 million. And this information is located in the T account for raw materials, right there. Then we need our direct labor. How much is our direct labor? And our manufacturing overhead. We can simply go to the T account, copy, so what's our total manufacturing cost? You simply auto sum them, and we get 3,128,000. There was no beginning work in process inventory. What was our ending work in process inventory? If we go back to our T accounts, 200,000. And so the cost of goods manufactured ends up being $928. And I'll show you one other thing and we'll be finished. If we go to the T account, 2,928,000. And so when we do cost of goods manufactured, we already have the answer. We already have the answer in the T account. Let's see if it will move over for me. That's the answer to that statement. That's the answer. Let me give it another color. That's the answer that's going to be on that statement. So you already know what the answer is going to be. And we said our unit cost was how much? We'll be done. $73.2. So top management just want to see this. They want to see what the cost was, what your actual cost was, and then they're going to compare that to that estimated cost, and that estimated cost is $68, and they want to know what happened. So they're going to want to know why this cost was not $68. Any questions? So this is manufacturing accounting, where we're placing what we did in financial, we're doing the manufacturing part, which is what you got to do, Jennifer, for what you're making.
Yeah, there's a
Because
lot.
what? Because you know you have to tell me eventually how many you got to sell to break even. And how many you got to sell and produce to make $1 million? So suppose you wanted to make $1 million. How could you make that happen? What would your cost structure have to look like? And everything is based on one unit. So if we look at it, it all goes back to making journal entries. The journal entries are here. They won't change. So on everything we're doing, these are the journal entries. You just got to put the right amounts in. And once you get to the T accounts and finish up with the work in process account, maybe I'll try to copy it. See if I can put it down here somewhere. I don't want to paste act right. Special. Well, what I was trying to just show you that if you look on the statement, if you go back to the T account, all of that information comes from here. So to get that statement, so it's not that much. Maybe I'll try it over here. Okay, showed up on this one. I guess maybe they're large enough over here. So if you check, you'll see that every number in this T account eventually shows up on the statement. So the work in process account is utilized to get the statement. So once you make the journal entries and you post to the ledger, you're there. Anything for the good of the cause today? Okay. So you have a simple assignment so you can rest your brains a little bit. You just got some multiple choice questions to do on Tuesday, where we look at parts of the process. So you've seen the whole thing. We'll chop it into some parts on Tuesday. Then Thursday, your team is going to have to work on a problem like this by itself. On Thursday, your team will have to work a problem like this by itself. So you think y'all be ready in 1 week to work one of these? So review it. There's only about what, 14 of journal entries. Now some of you all have worked 50 and 60 and 70 journal entries before. So you only got a few journal entries, you just got to work with it. So it's new, it's different, but we'll be there. So you all have a pleasant weekend, and I will try to get this video tape up later tonight sometime. But once you work with this, it won't be that difficult. but it is different because you're working with manufacturing accounting for the first time. Any parting words? Anything for the good of the cause?
Professor Boyd.
Yes.
Hey, I was wondering, can I still submit the quiz? I'm at work. I had to wait till somebody could relieve me.
We've already gone over the quiz.
Yeah, I know, but I did the homework. I just didn't want to fill the quiz.
You might have to do a quiz another time or something.
All right, that's fine.
All right. So we'll work through it. Y'all are making it just a little too hard, such as, calculating, estimated cost and everything. Not a little different, but it's not a high mountain, it's a low mountain, and we will plan to get over it. I will see you all on next Tuesday. If any questions come up, you need to meet on Monday, email me and let me know. But Jennifer's going to have a review session, so she'll cover all of this. Okay. We'll see you all next
Bye.
week. Goodbye.
Bye. Thank you.
Okay.
Have a good one, sir.
Bye, you too.
Thank you.